premium brand had better be delivering something special, or it's not going to get any in the business. Hi, and welcome to my book report speech for ARBUS 300. And the quote you just heard was from Warren Buffett. And I love it because it brings in two concepts that I'm going to be bringing into this book report. The first is branding and how that brings success to both the corporates and the individual investors. And the second is that in and of itself, it's the corporate and the investors in the financial industry, and being from Warren Buffett himself. So without further ado, I'm going to introduce the book that I read, which is The Little Book of Value Investing by Chris Browne. Now, this isn't the singer, abusive guy, Chris Browne. This is the very intelligent value investor, one of the managing partners at Tweedy Browne Company in the States. Very, very smart value investor. Has done very, very well over his life of investing. So the book report speech that I'm going to expand on is not how to step-by-step invest like Warren Buffett and Benjamin Graham. More so, I'm going to talk about how personally branding yourself has a huge impact on your success in the financial industry. So without further ado, I'm going to talk about the three main points that I learned from this book. The first being how a corporation's branding success leads to their financial success. The second one I'm going to get into is how separating yourself from the herd, is which I lovingly refer to those who are the general consensus, and how separating yourself is an effective impact on your financial career. And third is just why are people involved in the herd? Why do people generally just go with the consensus and do what everyone else is doing? So first, the ability of corporations to brand themselves is essential to their success. As we talked about in class, a study found that better run and financially sound companies are often very well branded. And a strong brand often involves defining success through terms, goals, and resources that then sharing that vision with everyone. That includes shareholders and employees. And this is an effort at deconstructing neoliberalism. So Enron is a negative example, a counterexample to strong branding. They put profits over employees, deemed themselves too big to fail, lacked critical thinking, and were very vision empty in their passion and striving for money and continuance of neoliberalism. So in Browne's book, he suggests investors should pay attention to the insiders in the industry. Now, insiders are those who have often already built their brand by being effective managers of money or corporations. And that means a lot of people will listen to what they have to say. So when these insider investors start investing, people will take this as a catalyst and move themselves into investing in the same areas. And that will create a catalyst for increasing the price of stocks. So therefore, corporate branding has a very strong impact in the general marketing sense. Secondly, investors who can build a strong brand significantly separate themselves from the herd. These ones who can shut themselves off from the herd are called contrarians because they run contrary to how the rest of the general population works. And these titles give them to value investors who can do so. So they often play the pendulum model, where they will buy when a lot of the herd has sold it because it has become undervalued, and these value investors will then sell when the herd starts buying into these overvalued stocks and driving the price up. So the most important part of being contrarian involves critical thinking. As discussed in class, critical thinking is a way to be able to point to the non-obvious. For investors, the non-obvious is the value of stocks. So it involves steering away from the influence of the media, friends, and such, and only focusing on value. Warren Buffett is an amazing, effective value investor who continuously beats the odds. For example, back in the 1980s, he bought stocks into Gillette, who was suffering at the time from the introduction of disposable razors. He invested $600 million in them, and 25 years later, in 2005, that $600 million investment was worth $5 billion. That was over 2 times the amount he would have got if he had just invested in the S&P 500. So obviously, branding yourself as Warren Buffett as a very, very intelligent investor has been a successful implement to his career. Finally, understanding the herd mentality and its lack of brand provides opportunities for contrarians and reasoning for financial crises. From Parker's reading, a constellation of people and things moving in unpatterned, random, unarchaic ways with no sense of collectivity or orientation towards each other would simply not be an organization, would not be organized in any meaningful sense of those terms. The herd is an organization, and that means they move collectively to take market information and disperse it through the market to affect stocks. And obviously, when there's been such a majority understanding of how something should be, that's going to mean there's going to be trends to stock prices. For example, Yahoo in January 2000 sold for $237 per share. Just over a year later, they're selling for $11 a share. That is not because of the true value of Yahoo has fallen, but because there has been a market information error in the transference of that market information. Similarly, these market areas have led to market crashes, such as the financial crisis of 2008, as well as the dot-com bubble of the late 90s. The herd suffers from groupthink, basically is what we're getting at, whereby there is an illusion of invulnerability, where they think they're incapable of being wrong. What Browne actually points out is that this herd instinct dominates the money management industry, because people are actually afraid of being different and looking like a fool when they're wrong. When everyone is a fool together, no one is laughing, well, except for the contrarians. Therefore, this explains why the herd mentality is to stick together because they feel safe. Therefore, in conclusion, the ability to brand oneself or the corporation is a significant contributor to success in the investing industry. Critical thinking, avoiding the trap of groupthink, and watching the insiders are especially important factors in being able to stand out. So what's your brand? Because without a premium brand, Warren Buffett isn't going to invest in you.